Founder of investment firm Future Africa, Inyolua Aboyeji, has disclosed his company's willingness to invest in small business operating in Nigeria in a bid to assist their growth. He, of course, co-founded Flutterwave and Andela, leading them to become billion-dollar companies in Nigeria before quitting to product market to become an investor in that particular space. In a statement on his Twitter handle, he said the company is still interested in providing seed capital for startups at a range of from $25,000 to $100,000 in exchange for 5 to 10% stake in the firms. All right, well, let's discuss that, plus venture capital investing in Nigeria. Joining me to discuss further is, of course, Orji Udeze, who's the former head of creators and conversations product at Twitter. About that, you're very welcome. Good to have you.
Thank you. Thank you very much.
What do you make of this news? I guess when you hear about investments in the startup space in Nigeria.
So I've also actually been investing in startup space through a fund called the Kernel Fund over the last 8 years. So it's actually pretty similar, almost the same range of investments for the same amount of equity. And it's been a long slog. We had a huge uptick, obviously, before the Buhari regime, but this last 8 years have been tough. But the fact is, Nigeria in particular and Africa is such a great investment. Like, we have so much creativity, so many underserved needs or voids. Actually, that can be addressed with technology. So I don't blame him. If it makes absolute sense what he's trying to do. We're in the middle of a big market downturn, so investors have to be careful. They have to go after value. They have to go after companies that are driving real growth. But investing in Africa is huge. I can't even tell you how many conversations I've had in the United States over the last month about people who are completely gaga, very curious, trying to figure out how do I take risk with you in Nigeria. So it's still very, very, very interesting for a lot of investors in the world.
Great stuff. So when we talk about that, what are the factors that are driving the investment, I guess, over the last couple of years, or even the conversations you're having with those potential investors in the States? What's the factors behind that?
I think when you are in the top 5, 6 population, big populations in the world, you're absolutely on the radar for venture capital, for private equity, and so on and so forth. And Nigeria is a big country. People understand that represents opportunity. I think that obviously sometimes, we lack in buying power. But people, venture capital is very patient. It's about the future. And so these people have 10, 20-year, 30-year horizon, and they don't want to be last. And so Nigeria represents fertile opportunity for that kind of venture capital, that kind of patient money. The other thing is Nigerians are very smart. People know that we're producing huge amounts of engineers because we're so young. And they're beginning to make their mark. Like, a lot of people in Silicon Valley and tech industry are people like me who are Nigerian. And so when they see us, being at Twitter, running parts of Facebook, my friend Ime Achibong, for example, they extrapolate and say, wait, the people who are connected to you, they must be able to impact the world in the same way you're impacting the world. And I think the last thing is, in the last 2 years with COVID, remote work has meant that a lot of Nigerian engineers are working for global firms because they don't need to be there. And so they're starting to see the work ethic, the creativity. And I think those 3 factors are creating a huge amount of openings. And of course, the story of Flutterwave, of other companies that have really started to show huge valuations, people are paying attention, and people are trying to find the next one in the market.
Okay, great stuff. I'm glad you mentioned valuations, because I got to get your take on, I think you may have mentioned in your first answer, this global tech crunch, the layoffs. How do you think that's impacting valuations here and willingness to invest?
We talk about inflation, right? Price inflation, but honestly, the last 10 years have been really market inflation. Assets have been overpriced for a very long time. People have been talking about that, but there's so much money in the world chasing after so few equities, so of course there's been a lot of bidding up of values. And so you're seeing a reset. Some of those valuations are no longer supportable. Even Netflix took a beating by just losing 200K subscribers out of 100 million, which is kind of insane. So there's a reset in asset prices lower. So what does that mean for startups? It means that the capital funding them is less because LPs get their money from the markets. And so you're seeing, and that's going to cascade. The venture world will make fewer, more circumspect investments. There won't be so much money chasing after so few. A lot of companies will die because they can't just ride on infinite investor money. They have to actually create a profit. They have to have a sustainable plan. They have to, cut their burn rate. I think for Nigerian startup founders, what that means is that they have to really focus on value. They have to focus on real growth. It's not about hype anymore. People are going to have to retrench and build valuable things versus some of the hypey things that are not going to go anywhere. And it's up to those founders and the investors to figure out what that means. It also means that you have to cut burn rate. You can't. You have to get the staff you need. You can't be too frivolous. All of those things are in play, not just for Nigerian startups, but also for, frankly, startups all over the world.
Around the world.
Yeah.
What about the profit potential for startups in Nigeria?
I think it goes back to the top of the segment. If an investor is there just for quick hits, this is probably not the market for you, right? But if you're betting the fact that Nigerian engineers, Nigerian founders will figure out how to build on AI, will figure out how to build on computer vision, will figure out how to build value that is proximal to this economy because people need ways. Even in this year, we invested in retail technology, invested in identity technology, even the last few months. Those are things that the market needs to start to expand, to start to make services all digital. But I know, and good investors know that it's not going to be, it's not like you're not going to turn unicorns every year or so. That's not how it works.
Right.
It took us 5 years, or maybe 6 years to do our first exit. Wow. In a Kenyan startup, which turned out to be really good, which is in the fintech area. So it requires patience. Oh, and by the way, in those 5 years, Kernel Fund, we spent time helping them with strategy, throwing bodies at them who knew how to navigate through the markets. That's what Kernel Fund does.
Yeah.
And so it requires some patience. But I guess my experience tells me that at the end of it is real returns.
Gotcha. So lots of patient capital that's
Yes.
required. What about regulatory environments? What do you make of that for fintech tech firms?
So, I was recently at Twitter, and the Nigerian government banned Twitter.
Oh yeah, that made a lot of news here.
One of my colleagues actually runs international, Udeze, and she's still at Twitter at the moment.
Yeah.
And we were sort of talking about how to deal with it. And it turned out months and months and months. It wasn't a regulation, it was just a straight up ban. So I think because we are a big market, because we have a huge population, Nigeria is interested, just like India has or Russia has or the EU has, to put their stamp on these very influential social media apps. But I guess what has to happen is that it has to be cautious, right? A lot of these companies have abandoned markets that are sort of caustic to their business model. And so we can't just demand things that are sort of unanchored from mutual benefit for those companies. So any regulation that has to happen with those companies has to be very careful, very thoughtful. And in fact, those companies want thoughtful regulation, right? What they don't want is capricious regulation. So I think it makes sense for us to think about what works for us because we have a huge population, we're in a transition year, but we can't be arbitrary about it.
Great stuff. RJ Udeze, who is Udeze, former head of creators and conversations product at Twitter, also at Kernel currently. Thank you so much for joining us. Really appreciate it.
Thank you very much. Thank you.